heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Tesla, it beats delivery estimates, but it's still a second consecutive drop in quarterly deliveries. We break down those numbers.
And Microsoft's AI deal with the UAE's G42 faces risks over national security concerns. We have the details.
Plus, we sit down with the new CEO of Amazon Web Services, Matt Garman, for a live interview as he wraps up his first month on the job. But first, let's check in on these markets. The Nasdaq trying to shake off what is perhaps some slightly more hawkish signs from the data today. The JOLTS data once again showing the labour market is strong here in the United States. Meanwhile, though, we have more dovish tones coming from the Federal Reserve and indeed a CPI print coming in Europe that shows inflation is cooling. So a lot of macro to be digesting. We're up about 0.2% when you're looking at the big tech benchmark. Looking at the stock 600, though, underwater by 0.5%. Maybe that's off the back of some of the rally that we saw yesterday, but of profit taking as we still digest a lot of political risk happening in Europe, and the ECB still saying, look, we're going to be cutting into the rest of the year. Looking at the 10-year yield, actually managing to push down 3 basis points. We're off of our lows, but still money moving into the bond market, probably on the back of Fed Chair Powell. Move on, have a look at what's happening in the world of crypto, because as bonds rally, interestingly, we've got the dollar going higher, and that isn't always good news for Bitcoin. We're currently off by 2%, 61,938. Although, interestingly, Ed, we did see signs of a turnaround in terms of inflows into those Bitcoin ETFs in the previous week. What have you got?
Let's take a look at the electric vehicle sector and Tesla's second quarter deliveries. The stock's on track for its biggest jump since April and trading at its highest level since January. Let's get right to the data and the second quarter. So, deliveries do beat estimates, just below 444,000 deliveries. Production, 411,000. But as we spoke about, it's the second sequential quarter where deliveries have dropped year on year. So you beat the street expectations, but that's not a chart that you want to see, right? Deliveries going in that direction. There was a really big bright spot, which is energy installation basically doubled quarter on quarter. We'll bring you that chart in just a moment. One point I just make really quick, Caro. When we got those delivery numbers for the first quarter, which was very bad, Tesla included a paragraph explaining some of the factors at play. In the release for the second quarter, there was no paragraph, no explanation, no commentary, though we did get a lot on the last earnings call from Elon, right? Competition with hybrids, difficulty of interest rates, all the stuff that the market's been talking about for a fair few weeks now.
But the excuses do seem to be drying up, certainly when it comes to Middle East supply issues, when it comes to arson that was, of course, seemingly to blame for the first quarter. Let's dig in with Steve Wesley, Ed. Great setup, but we want to get a take from the managing partner at Wesley Group. Of course, your view on Tesla, having been a board member, a very, very, very early investor from the pre-IPO days in Tesla. And I'm really interested as to what you make of the sudden slowdown in sales and why.
Well, look, I think Ed's exactly right. Numbers better than expected, delivered 444,000 cars, up from 387,000 last quarter, but still down 5% year over year. Here's the big picture. Tesla's growth has slowed from an extraordinary 71% in 2021, 51% in 2022, down to 19% in 2023. This year could be the first negative year Tesla's ever had. That's why the stock's down 30% for the year. They've lost $700 billion in value since November 2021. This all creates huge pressure and some high drama for this big August 8th unveil of the full self-driving robo-taxi. So the big question is, can Tesla pull a rabbit out of the hat? We're going to see in about 5 weeks.
Well, what rabbit would you need? A lower, cheaper price model, rejuvenation there, or still waiting on the robo-taxi?
Well, I think what you're likely to see is an all-new vehicle built on a new, smaller chassis. And I think that could be the chassis of the future for the new $25,000 car. And I think he's also going to show that full self-driving is almost ready to go. The big question is it going to be ready for the regulators to allow it to go out the streets throughout the U.S., or will they do something a little different, like launch in China first? A lot of speculation. But if they can get these two things right, Tesla may be back on top for the next decade.
The stock up almost 9% in the session, but down 8% so far in 2024, down 13% over the last 12 months as I punch that into my Bloomberg. Remind us a little bit of your history of Tesla. You're a former board member, but at the time you were a board member, energy was not as big a component of the business. We've got a brilliant chart that I hope we can bring up showing the big jump in energy installation in the second quarter of this year. What did you make of that, Steve?
So Elon's got the big picture. It's not just a car company. It is an energy company. And frankly, it is an AI company. The energy division is the biggest, fastest growing division of Tesla. It may become one of the most profitable divisions. And that's something we've been tracking for some time. But the big picture here is by 2027, they're going to be selling 30 million EVs a year. Every automaker in the world is going all electric. And if Tesla can get this $25,000 car into the market along with full self-driving, they and BYD are going to be the kings of EVs for a long time to come.
Steve, I think we need to take a bigger picture look at electric vehicle sales all around the world. You have many more players in China who are reporting really good numbers. A lot of folks, actually I've been getting hammered on social media, I'll be honest with you. I've been getting absolutely hammered from all sides. Those that are very pro-Tesla, Tesla shareholders, owners, those that are anti-Tesla, anti-Elon, you can't win. But loads of them are pointing out that Tesla delivered more pure battery electric vehicles than BYD. At the same time, I mentioned at the top, Elon Musk has talked about the challenge from hybrids. That's the market right now. The legacy OEMs bringing more hybrid models online. The health of the market at large, please, with that context.
Look, the whole world is going electric. That's why we invested in Tesla in 2008. We saw that there was going to be this precipitous downward curve in the price of batteries. And that is why the whole world, every automaker going all electric. Now, you're going to see slowdowns. Tesla's in the middle of they call it the valley of death between the wildly successful Model 3 and the Model Y and the next generation of AI-driven full self-driving vehicles. As you move into that, I think they're going to do well. In the meantime, Tesla is becoming one of the largest sellers of energy in the world. They have applied and been approved to become a utility. They provide what are called mega packs to utilities all over the planet at an astonishing rate. When I was in the old days, you mentioned utilities. That was a boring industry. Now utilities are reshaping the world. That's part of why we've raised our new seed fund.
Talking in the old days, Steve, and before we get into your new fund, your old days, you've known Elon for a very long time. In your old days, you were on Capitol Hill. In your old days, you were serving as California co-chair for the Obama for America campaign. Do people come to you and say, Elon's the problem here when it comes to buying a Tesla?
Elon is, without a doubt, one of the most polarizing figures of the age, and then some. Having said that, he has transformed the global transportation industry. He's transformed the American space program. He appears to be on his way to co-leading a revolution in artificial intelligence. It's hard to cast too many doubts, but is he polarizing? Absolutely. Has he made his share of mistakes? Look at the Cybertruck numbers, form your own conclusion. But I still think he is likely the best person to lead Tesla into the new future.
Steve, you're looking for the next Tesla. Your firm, the Wesley Group, $100 million new fund. The focus is at the seed stage. Sounds tough. How do you find the next Tesla, be it the energy component, something to do with autonomy, something to do with electric vehicles, infrastructure, at the very nascent stage of a startup's life?
Look, investors all over the world are waking up and they want to invest in this new future of sustainability, EVs, green energy. We've raised a $100 million seed fund to help transform the world's largest industrial companies. And we're building on a 17-year track record of having raised 4 funds to invest in game-changing companies. So we're already had 9 companies go public, including Tesla, 3 other multi-billion-dollar exits. And I think our real secret sauce is the expertise we gained from having 32 of the world's largest energy, mobility, insurance, building companies as investors. They help give us unparalleled deal flow. We review about 4,000 companies a year, keeps us on our toes.
I mean, you've got money from Duke Energy, Origin Energy, Alaska Air, Vontier, many of them wanting sort of strategic investments here, Steve. Is electric vehicle the strategic place to deploy capital right now? Is it automotion that you need to be more focused on? Is it energy? Where are you going to get the real bang for your buck, do you think?
Yeah, well, that's exactly the right question to ask. Let's jump right into that. There are unbelievable changes going on in the utility sector. EVs, autonomous vehicles, AI is causing the electricity demand globally to double by 2050. Utilities used to be boring. Now they've become the linchpin of the global economy. And energy, it's renewable energy, long duration power storage, virtual power plants. In the mobility sector, again, every company going electric, and that's because EVs this year will start costing less than comparable internal combustion engine vehicles. AVs are coming quickly. In the world of industrials, it's all about AI, robotics, making everything happen faster. We're in the center of those dramatic industrial changes. It's the most exciting time in the world to be an investor.
For what it's worth, Caroline, Musk has just posted on X that the delivery of electric vehicles is a very small part, big picture, relative to what he's expecting for Optimus, robotics, and autonomy. So we'll see whether he's right or not. Steve Wesley, managing partner at Wesley Group, former Tesla board member. Terrific start to the program. Thank you. All right, coming up on Bloomberg Technology, Microsoft's AI deal with the UAE company G42 is raising some concerns in Washington. We'll have those details coming up next. This is Bloomberg Technology.
Remember back in May, Microsoft, G42, the United Arab Emirates, the UAE's AI firm, well, it announced plans to spend $1 billion on projects together in Kenya. It was a deal which was negotiated with input from the US and the UAE governments. But while some see this partnership as a way to help the US combat Chinese influence in the global south, others, well, look, they're concerned about potential national security threats. Bloomberg's Mackenzie Hawkins has a story out today, absolute deep dive with some of your colleagues, Mark Bergen being one of them. And really the key issue here is what? A transfer of AI knowledge to the Middle East and beyond.
Right. So Microsoft earlier this year announced that it would invest $1.5 billion in G42. This was this landmark deal that was blessed by the United States and UAE governments at the time. But since then, there have been concerns cropping up in all corners of Washington, everything ranging from human rights concerns about, do we really want to be shipping advanced AI to Gulf states that have questionable surveillance measures on their constituencies, to cybersecurity risks related to Microsoft. Commerce Secretary Gina Raimondo's email was hacked last year on a Microsoft server. And the most fundamental question facing U.S. officials right now is whether to approve shipments of the advanced AI chips that Microsoft and G42 need to actually make these data centers a success.
There's going to be loads of people watching Bloomberg Technology going, I hear G42 all the time. G42, big numbers. Mackenzie, what is G42?
So G42 is the preeminent AI company in the United Arab Emirates and really in the Middle East writ large. There's Gulf states, including not just the UAE, but also Saudi Arabia, Kuwait, and Qatar that are pouring massive amounts of money into AI development. And G42 is sort of the crown jewel of the UAE's AI empire. And particularly, the UAE is jockeying with Saudi Arabia over AI and data center leadership. But the U.S. has concerns about the entire region. They had added the Middle East, much of the Middle East, including all four of those Gulf states, to an export controls framework that originally focused on China and restricts U.S. companies from shipping advanced chips or advanced chip-making equipment to countries on that list without a license from the U.S. government. And since implementing that rule in October, they've pretty much slow-walked licenses to that region while officials jockey over whether or not to allow companies like the UAE's G42 to access American technology over concerns that it could also be a backdoor way for China to get access to those tools and chips.
But if they don't build the ties with the Middle East, then is China going to win out in the global south? Are we going to see this ongoing narrative of a battle just escalate?
So that's exactly the concern and the consideration. You know, there is so much money going around that the calculation on the part of the Biden administration is if Middle Eastern companies are not spending that money on American companies and American equipment and chips, they will spend that money with China. Part of the deal with Microsoft and with G42 is that G42 would strip Chinese company Huawei out of its supply chains. Now, there are concerns at the Pentagon that maybe they're actually not going to make good on those commitments, and G42 has hired a third-party auditor to say, no, we actually will, and we're going to have an independent party that's going to show you that. There are concerns about how much money they're paying the auditor. You could go down a million rabbit holes here. But the reality is China has decades worth of investment in the Middle East and in the global South writ large. A large part of our story today focuses on Kenya, where China's made inroads for a generation. As part of the broader Belt and Road Initiative, they have this quote-unquote digital Silk Road, where Huawei and the Chinese telecom giant ZTE have invested massive amounts of capital across Africa and Central Asia. And this Microsoft G42 partnership might be the United States' best chance at hitting back a little bit.
You know, Mac, in the same competitive spirit, the White House has started writing checks. We finally see the flow of capital from the CHIPS Act in the workforce context. There's also this award for tech hubs on the East Coast, New York and Florida. Explain those developments to us.
So we saw a couple of workforce and tech-related developments out of the CHIPS Act in the past 24 hours or so. One of them is that we have the first application process for CHIPS Act funding dedicated specifically to workforce development. Now, the CHIPS and Science Act is much bigger than just grants to companies like Intel and TSMC to build factories here. There's also an $11 billion fund for research and development, which houses this new center called the National Semiconductor Technology Center, and this workforce funding is coming out of that. And it's basically calling for everybody from community colleges to apprenticeship programs to companies partnering with those types of entities to apply for relatively small amounts of money, but still starting to see that application process opening up for programs specifically around workforce development. The U.S. could be short as many as 90,000 semiconductor technicians by the end of the decade, and that's the same time frame that we want to be making more than a fifth of the world's most advanced chips. Labor shortages are one of the most off-cited headwinds to a successful U.S. semiconductor build-out. So we have that on one side. Yeah. And then we also have this announcement of a dozen, what the Biden administration is calling tech hubs. And that comes from the quote-unquote and science portion of the CHIPS and Science Act. It was authorized as a $10 billion program, basically trying to use federal money to marshal in private capital outside of traditional tech hubs, like where you both sit. And the administration announced a dozen of those yesterday, spanning everywhere from Florida to upstate New York to Tulsa.
Mackenzie Hawkins, across the labor issues, the geopolitical issues, so much when it comes to chips and talent. We thank you. Time now for Talking Tech. First up, U.S. auto sales may see a slowdown. According to market researchers, vehicle sales are expected to slow to an annualized rate of 15.8 million in June. That's down from 16.1 million a year ago. The slowdown comes as buyers face high prices, steep borrowing costs, cyber attacks that impacted dealerships, and of course deliveries across the entire country. Plus, according to sources, Northern Data is weighing an IPO of its combined AI, cloud computing and data center businesses. Banks who are asked to pitch for the role have put valuations between $10 to $16 billion. Now, the company would potentially list on the NASDAQ and could come as early as the first half of next year. And Samsung employees have planned a walkout. Union workers over at South Korea's largest company say that they are planning a 3-day walkout beginning July 8th. And the union has announced the decision yesterday evening after its latest wage negotiations failed to yield any breakthroughs. Ed, what are you looking at?
Okay, someone new has entered the Paramount party. According to the New York Times, Barry Diller is exploring a possible Paramount bid. Now remember, Diller led Paramount Pictures decades ago, but lost a bidding war for the company. Bloomberg's Hannah Miller, fresh on a new beat, joins us out of New York City. This is an interesting one. What are the details in the New York Times report?
Yeah, so we know that this came together after Sherry Redstone walked away from a proposal for a merger with David Ellison's Skydance Media, and that NDAs have been signed between NAI, National Amusements, that's the holding company for Sherry Redstone's Paramount shares, and IAC, which is Barry Diller's firm.
Isn't it interesting that Barry Diller lost out to Sherry Redstone's father, when wanting to get some of these assets previously. What assets would you think he'd actually be after if this is all realistic? Because there's talk about Paramount Plus being weaved into another streaming company too.
Yeah, so there's something very poetic, very nostalgic about this, I think, for Diller. You know, he did head Paramount Pictures, so I'm sure that's of great interest to him. Yes, we've heard a lot of talk about Paramount Plus, doing a joint venture on streaming. Max has come up as a potential candidate for that. So it'll be interesting to see what he's gravitating towards. But yeah, I mean, it's film and television. What's not to love?
So I feel like we've been talking about this for a very long time. And I'll be honest with you and with our audience, I've lost track of who is and who is not trying to buy Paramount. Diller aside, who are the other players still in the race?
Yeah, so, we know media mogul Byron Allen has made a bid, been very vocal about that. We also have Edgar Bronfman Jr. and Bain Capital that have also put in an offer. And Sony and Apollo, that was way back. They've kind of had to rethink their strategy. But yeah, there are still a lot of bids coming together. I've been talking to people and have been told that Sun Valley next week, that conference is going to be really pivotal in this, and that we could see deal talks percolating there.
Of course it is. And Hannah, I mean, you sort of rather poetically yourself said, TV movies, what's not to love? The margins are what people don't love. I mean, how much ultimately has this become a difficult to sell asset?
Yeah, there are serious liabilities here with that $14 billion in debt being a leading one. We know Paramount is racing to cut costs, that they're looking to cut $500 million in costs. So, there are some strings attached here. This isn't going to be, an easy road, whoever takes this over. But yeah, they're still appealing assets. I mean, as streaming strengthens and, deal talks circulate around Paramount Plus.
Oh, everyone's going to be there watching who's shaking hands with who and walking with who over in Sun Valley. Hannah Miller with it all.
Welcome to our Bloomberg TV and radio audiences worldwide. It's been 1 month since the changing of the guard at the top of Amazon Web Services, with Matt Garman becoming CEO. And he joins us now for an update on how things are going and to lay out his vision for AWS, the leader in the cloud market. Mr. Garman, good morning to you. Let's start with the basics. What have you spent the last 30 days or so doing, and how quickly have you tried to implement changes that you think were helpful or important at AWS?
Well, thank you, and thanks for having me this morning. It's been a great first month. I've been diving into various teams and understanding where all the teams are working on, and in particular, I'm excited about the opportunity in front of us. I've spent some time sitting down with customers and understanding what's important to them. Spent a bunch of time last week in Silicon Valley talking to some small startups to understand what's going on in the generative AI space. And there's a lot of excitement about new technologies that are coming and the potential for where businesses go. So I'm incredibly excited and looking forward to the business.
Matt, we will talk about generative AI, but your background's so interesting because you've held pretty long periods of both engineering and sales responsibilities in the cloud market at AWS. Before we were talking about AI, the story with cloud was really clear. There was this massive total addressable market where companies all around the world had not yet transitioned workloads and storage to the cloud. And increasingly, we're actually talking about on-prem being back a little bit. Just talk to me about your strategy for going after that addressable market, the basics of cloud computing.
Yeah, the opportunity ahead is really enormous for the business. If you look out there and you actually talk to most customers, the vast majority of their workloads aren't yet in the cloud. Some estimates are only 10 to 15% of workloads have actually transitioned to the cloud. And actually, we hear from customers that, if anything, they're looking to accelerate that transition to the cloud. If you think about generative AI or other technologies, most customers are finding that it's hard to actually take real advantage of some of these new technologies that are out there if their data is not out in the cloud. And so when we talk to a lot of customers, they see this new era of generative AI as a accelerator for reasons to get their data in the cloud, to put it in a data lake, and to be organized in a secure and safe environment where they can actually go and innovate and deliver value for their business. And so we're actually seeing this as an accelerator Actually, when I talk to most customers, they're trying to find ways that they can migrate more of their workloads and more of their data into the cloud faster than they ever have before. And so we think that that's a huge opportunity for AWS business, but we also think that's a big opportunity for our customers as they can gain agility and can innovate faster for their own customers once all those workloads are in the cloud and they can focus on delivering value to their end customers.
Alphabet and Microsoft and IBM and all the others might also see this as their opportunity too, Matt. And I'm interested as someone who basically helped build cloud as a business model back from 2005 when you're interning, how you think Amazon and AWS is different at this moment.
Yeah, you're right. So, and as you mentioned, I've been working in AWS since 2005, 2006, since we started AWS. And so if you look about where we're different, there's a couple of things that I would focus on. Number one is we have a lot of experience going and helping customers in the cloud world. And from the very beginning, when we very first started AWS, we said priority zero for us is security. Customers are trusting us with their business. They're trusting us with these critical workloads. And so security is first and foremost. Second is operational excellence. And so we know that for our customers, if we have to be secure and we have to perform in an outstanding way. So performance, security, those are the two things that we focus on. And then we think about how do we help customers innovate? And we really like to partner with our customers. We want to lean in. We want to understand where their struggles are, where they're having problems with their on-prem environments, or where they're slowing down because they're doing too much of the muck, we call it, instead of actually innovating for their customers. And then we deliver a really rich set of services. And if you go look at AWS, we have by far the widest set of services and capabilities that allow customers of all sizes, whether they're startups or enterprises or governments, to go and innovate out there for customers. And so when you have that baseline of security and operational excellence, and then you have the broadest set of capabilities, it's, for many customers and most customers out there, it's a no-brainer as to what's the optimal platform to go from. And yeah.
So is that no-brainer, meaning you're still accelerating for AWS growth as we see that pivot point in the previous quarter? Are you still accelerating profits too?
Absolutely. AWS is still growing faster than any other cloud provider out there on an absolute basis. And we see customers leaning in. And so we see, again, this is such early days for the cloud. It really is early days. And so we see massive growth and acceleration ahead of us and huge opportunity for the business.
Matt, since you've been in the job for 30 days, what's your understanding of what a run rate in the billions of dollars tied to generative AI actually meaning? What have you come to see across your desk as that being a business of?
Yeah, and as you mentioned, generative AI, look, is already a multi-billion-dollar business for AWS. And so it is a big business for us today. And when you sit down with customers, I think you look at kind of where this transition has gone. It started out, call it a year and a half ago, with ChatGPT. And everybody thought this was a fantastic technology, and it is, and it was. And then so the first thing that everybody did is they basically built chatbots for their website, right? And so as customers, though, are transitioning, they're trying to say, where's the real enterprise value for me? How am I delivering value to my customers? And so when they think about AWS, they say, I have a platform that I can build on. It's secure at the baseline. It has a bunch of capabilities that I can actually go and build value for my customers. And so we increasingly are seeing customers say, how do they get real value for their business? How are they delivering revenue growth? How are they delivering real cost savings? How are they completely transforming their business that's just different than how anyone has done their industry before? And I think that's the real potential. Even though today it is a multi-billion-dollar business, I think it really is the nascent part of this technology, because what it's capable of doing is progressing so quickly that I think a year, 2 years from now, you're going to see many industries out there have completely changed how they think about work, how they think about delivering value to their customers, and it's a super exciting time for innovation and for technology as a whole.
For our Bloomberg television and radio audiences around the world, we're speaking with the AWS CEO, Matt Garman, 30 days into the job. You know, Matt, an important development of your predecessor was the Anthropic investment. Most recently, the acqui-hire, so to speak, of Adept Labs, which is more focused on non-AWS Amazon. How much do those deals indicate that Amazon's had to bring in engineering talent to work on large language models?
How we think about it is the potential is massive. And we think that if you look at the AI space, there's not going to be one solution for everyone. There's not going to be one model that's perfect for all use cases. Our view is that customers are going to need a variety of capabilities. They're going to need large models to do reasoning. And the Anthropic models, by the way, are fantastic. And the new Claude 3.5 Sonnet model is by far the best in the world right now. And that's fantastic, and we love working with that team. But a lot of customers we find are combining those large models with small models, and then they also need capabilities. And one of the areas that we're really excited about is agentic workloads, where models are actually going to be able to call out and do things out there in the real world, not just summarize data or give you information, but actually go and perform actions. And that's part of where we're really excited about the technology from Adept. And so we think that there's a lot of these different components. Many of them are going to be built in-house and have been built in-house with AWS. Many of them come from external capabilities, and we think that there's going to be a really rich ecosystem of capabilities that customers are going to want to build from, and many of them are partners with us, and many of them will provide as first-party offerings.
A rich ecosystem needs rich infrastructure and energy at that, Matt. How are you seeing the need for energy growing at AWS? How are you satisfying it? There's much talk about nuclear, for example.
Mm-hmm. Yeah, it's a great point, and it does need a lot of energy, and that's why if you rewind even several years ago, we're the single largest purchaser of renewable energy in the world for many years in a row now. And part of that is we saw this coming, and we've been thinking about how do we build up enough power in a sustainable way that's carbon neutral, that we can support the energy needs for technology. And so we think that growth is going to be significant, and there's a lot of work that's going to go forward in continuing to make sure that we have enough power to power the workloads that our customers need. But that's part of what I think we bring to the table. We've spent a lot of time getting good in this space. We've spent a lot of time thinking about how do we make sure that we have enough sustainable power? How do we make sure that we have enough components in our supply chain? And how do we manage that spend? As you mentioned, it's a pretty significant infrastructure investment. Mm-hmm. How do we make sure that we manage that in a reasonable way so that it's good for the AWS business and that we're being responsible with how much capital we spend, but we can also grow the power footprint that the world needs in a sustainable way. I think that's an important thing of what AWS brings for people.
Can I ask about, therefore, that profitability? Because there has been marked improvement in profitability, but the question is, at the time of investment, are you managing this by cutting costs, by ultimately having let go of people? Are you managing to equate it more by just more higher pricing for these AI-related services?
No, we think about this business, this business will have ebbs and flows over time, particularly as we make large financial investments in the future, whether it be large investments in power or data centers or components and things like that. So the profitability of the business will go up and down over time. But long term, we think that AWS will continue to be a very profitable business for Amazon. But for us, it's all about investing in the future and making sure that we have the right team, that we have the right setup in place. And we have a long-term vision of what this business is going to be. So we're not thinking about particularly short term, but we're thinking about how do we really go after that long-term potential so that AWS continues to grow at a rapid rate for many, many years. And we want to make sure that we have that right team in place, we have the right infrastructure in place, and we have the right investments in place so that we can be there for customers when they need us.
Matt, we've dedicated a lot of time on this program covering your proprietary silicon efforts, Trainium, for example. So we've done that. Could we focus on NVIDIA and discuss with me your relationship with that company, how supply of their AI accelerators is, and whether you actually will give us a forecast of how many accelerators you think you'll take from NVIDIA in the next 12 months or calendar 24?
It's a great question, and NVIDIA is an incredibly important partner of ours. They make a fantastic processor. They have executed incredibly well and have by far the world's best technology in this space, and have for the last couple of years. And we believe that AI technologies are going to rely on NVIDIA and GPUs for many years to come. So we think that they're a super important long-term partner of ours. In fact, we're getting deeper and deeper with them. Jensen has said on stage that AWS is their technology partner that they're building their own models on top of. They believe that, and they've seen that AWS has by far the best performing technology, whether it's on the network side or the availability of the GPUs, which actually is a super important part of building models. And so NVIDIA trusts AWS to go and build their long-term models. And we lean in on NVIDIA for that too, and learn about what's working well, what in the next generation of technology will they need from our data centers and networking. And we really have a great collaboration there to ensure that our AI customers can jointly take advantage of the best technology that NVIDIA has to offer and AWS has to offer in a combination so that they can really deliver the best technology for the world.
Partnerships being built. Matt Garman, thank you so much for joining us today. AWS
Thank you for having me.
CEO. Time now for VC Roundup. First up, London fintech company Revolut. Well, it's recorded its revenue for 2023 that nearly doubled to $2.2 billion. Now, interest income climbed to more than $600 million, but look, it's worth saying that it was offset by credit losses, which more than tripled. That impacted the company profits. Revolut's 2023 accounts were filed ahead of a deadline as the company tries to secure a UK banking license. Auditor BDO also signaled ambitions, of course, to take the company public. Meanwhile, over in the UK, Erin Platts, former CEO of the British arm of Silicon Valley Bank, is leaving HSBC to join venture capital firm Octopus Ventures. Platts joined HSBC in March 2023, remember that date, when the company was acquired by SVB UK, and now she will be joining Octopus Ventures in January as their CEO. Platts will remain as a special advisor to HSBC. And AI startup Sentient Labs raised $85 million in a seed funding round led by VC funds Pantera Capital and Framework Ventures, with investors including Peter Thiel's Founders Fund. Sentient Labs pays developers for their contributions to emergent AI tools, and the funding round ranks among the top 10 largest seed rounds for AI startups so far. Ed, what have you got?
Well, it's time for our VC Spotlight, where today we're joined by Vanessa Larco from NEA, and there have been so many themes we've been passing over. Guess what the main one is? It's generative AI, spoiler. Everyone has a different approach. They're either at the application layer where they're saying that's the untapped market, or they're saying you have to be in at the large language model level. As the parameters get smaller, there is just a higher volume of individual models being built. Where do you sit in that divide, Vanessa?
Well, thanks for having me. I'm very biased because I am an application layer investor. So at NEA, I have a colleague who does infrastructure investing while I focus more on the app layer. I think there's a lot of value at the application layer, but if you actually look at the funding, and I think a report that came out by CB Insights last year showed that the majority of the funding was actually going to infrastructure, and the bulk of that was going to these large language model company, and a very small fraction of it was going to AI applications. And I think there's a lot of reasons for that. One being it's still such early innings of how people are going to adopt it and which applications are going to be the ones that emerge and beat some of the incumbents. Whereas at the infrastructure level, it seems a lot more clear as to where those large language models are going.
This is where NEA's experience, your experience, where having done IPOs and spotted winners before, comes into bear. So which of the applications, Vanessa, should be the area of growth? Where do you think the value will eventually align that you're making the bets on?
Well, I think for me, I like to take a step back and think about what are the behaviors that are going to change because of this technology. And I think about it as three core behaviors in the workplace. There's search and synthesize, and I think Matt alluded to this in your previous segment around chatbots and everybody using it to find information. Then I think there's the creation. Once you find information, you want to create, add to it, change it, create an asset. And then the third is take an action or make a decision. And I think generative AI is going to affect all three of these things. Where I feel like most people are comfortable using generative AI is in these low-value, repeatable tasks. Think of customer support, customer success, and some strategic analysis. So looking at your data and trying to figure out what's happening. So taking that first step, but maybe not completely trusting it to do everything and have access to all of your data today.
Hence some of your bets in the likes of Forethought AI, one of the companies you've had on the show. But look, you have bets in companies that tangentially might use AI, but aren't AI first. I think of Greenlight, FinTech, making sure that our children are investing and understanding saving, but maybe not first and foremost an artificial intelligence company. You're also betting on the consumer. Is there money outside AI? Can you put checks to work right now?
Absolutely. I have never been more excited about consumer. I think every time the economic environment shifts one way or the other, whether it's booms or bust times, consumers change their purchasing behavior. And that's an exciting time for startups because that means that behaviors are changing and the incumbents may or may not serve the next generation of consumers whose behaviors are changing based on the environment. So I'm really excited because I'm seeing purchasing behaviors for consumers shift, incumbents not rising to the occasion, and startups getting a really good shot at acquiring entirely new customer bases. So I think now is the time. And to be honest, the consumer doesn't care if it's generative AI or not generative AI. They have something they're trying to accomplish. And if you're serving them and accomplishing it in a great way, that's all that matters. Now, on the back end, a lot of companies do want to use generative AI to improve their margins or an efficiency and all of that. But for the consumer, at the end of the day, they have a need and you have to meet that need. And that doesn't change no matter how much technology we throw at it.
Vanessa, earlier we talked about the tech hubs that the Biden admin's backing. That includes areas like South Carolina and Georgia where you've been active. Why is that an interesting place for you?
Well, I think for me, Atlanta is a really interesting ecosystem because you have great technical talent. I'm biased, I went to Georgia Tech, but it's a top 10 computer science program. You also have Emory and a bunch of other schools in the area that are phenomenal schools and great producers of talent. The other unique thing about Atlanta is that you also have a lot of Fortune 500 companies. And these aren't your stodgy old Fortune 500 companies. They're very committed to adopting new technology. So they have a lot of programs to purchase and procure technology from startups. So startups can sell into their neighbors, which are big Fortune 500 companies, and get these big deals right out of the gates. The other thing I like about Atlanta is that they've had exits. So this is, typically when you think of big tech hubs, San Francisco, New York, they have exits, they have IPOs, they've had giant acquisitions. And those companies then create a bunch of other entrepreneurs who have huge aspirations. And
Vanessa Larco, NEA partner. We're out of time, I'm afraid. Vanessa Larco, NEA partner, thank you so much. This is Bloomberg Technology. A first for Microsoft billionaires. Former Microsoft CEO Steve Ballmer has passed the company's co-founder Bill Gates to become the 6th richest person in the world. The move came as Microsoft shares rose to a fresh record, bringing their total gain this year to 21%. More than 90% of Ballmer's $157.2 billion net worth is in Microsoft shares, according to the Bloomberg Billionaires Index. Gates, meanwhile, has diversified his fortune and dedicated quite a lot of it to philanthropic causes. Caro.
An interesting changing of the guard and the Billionaire Index. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget about our podcast too.